Hello everyone and welcome to the US session brief. We're on Thursday the 4th of May 2023. Yesterday was a big day with the Fed raising rates as expected by 25 basis points. They did amend the wording of their statement, but whether they paused rate increases was left slightly ambiguous. The big events today are Apple earnings after market close and the ECB rate decision before market open. In fact, that should be with us any second now. Just double checking here when the ECB should be coming through. Yeah, it's just coming through on my feed now. So 25 basis points hike as expected. Just looking at some comments from the statement. ECB ready to adjust all instruments to ensure 2% price call met. ECB expects to stop APP reinvestments as of July. Future decisions will make rates sufficiently restrictive. Yeah, that looks like the highlights for now. Lagarde will be coming on in 10 minutes, I believe, or 15 minutes, 20 minutes. I think she's on. She's due for a press conference. So, like with the Fed yesterday, it was Powell's comments and conference, which actually was leading to more of the movements that we saw in markets than the actual release itself, because it came through as expected, 25 basis points, and the ECB exactly the same. So I'll just move past that for a second because the big events today, like I mentioned, are Apple earnings. That's after market close. We continue to see pressure in the regional bank stocks, and after yesterday's Fed discussion of no rate cuts this year, it would seem that the market still remains under pressure this morning. US futures have erased their earlier gains and now trading lower, so the S&P seen lower. The dollar also trading lower on the day, and bonds. Gold and BTC are seen slightly higher. Gold, very interesting moves yesterday. Woke up, so huge move to the upside, huge move to the downside. Yeah, just quite a bizarre one. All in all, it was, of course, during what is generally a quieter Asian session too. So whether there'd been some big bids in there by, I think Drew was speculating central banks. Maybe involved in that, but yeah, we did reach new all-time highs, but then it was an immediate rejection, and you've got to alarm bells must be ringing now for bulls, because last time we rejected off that level like that, we saw huge moves back to the downside, and that was basically the near-term top, and that's happened twice now off this level, and just because of the size of the move downward that we've seen, $35 off it, there's some serious profit taking up at that level being done, as we can see. So let's just do a quick wrap of what we've seen elsewhere today. Asian equities recovered from a weak opening to closed mixed. Markets that finished higher include Hong Kong, Shanghai. Caixin manufacturing PMI for China was 49.5 in April, slightly below consensus. Equity markets in Europe have been slightly lower. We've got final Eurozone PMIs for April confirming today that the services sector is driving output in the region. Norway's central bank increased the rate by 25 basis points to 3.25% and signaled another hike in June. That's a new hike as well. In America, PacWest is under pressure following a Bloomberg report after the close that the bank is evaluating potential options, including a sale. Former FDIC Chair Bill Isaac warned of more pain to come in the banking sector. That's quite the opposite to what JP Morgan's CEO Jamie Dimon was saying when he was saying it's near the end. We're near the end of the crisis. So markets are now pricing in the probability of a dovish Fed pivot as soon as June, following Powell's press conference. That's why we saw a lot of weakness on the US dollar. Political leaders on both sides of the aisle are downplaying potential for short-term debt ceiling deal to give negotiations more time. Republicans are skeptical of recent estimates of earlier debt ceiling dates. Shopify is selling its logistics unit to supply chain technology company Flexport. That's pretty much it as far as the major headlines are concerned. Just double checking here. I'm just going to open as well whilst I'm speaking the Nasdaq chart, because the last time I checked, where will it be? US 100. Just give me 1 second, guys. The last time I checked, there was set to be a slight divergence on the open, but it looks like those gains have been. The Nasdaq was basically up up slightly. This was just a few. This was just a few hours ago, and then the S&P was down. So there's set to be a divergence on the open, but that doesn't seem like the case anymore because we have tested. We are looking now to test the low on the day for the Nasdaq there. This is on the 1 minute chart as well, by the way. So you can see we are testing that daily low, the current daily low after what was set to be a higher open. Treasury yields have jumped across the curve, though most steeply on the short-dated end as worries over the impending debt ceiling deadline weigh. Like I mentioned, gold has steadied, iron ore is declining while copper is gaining as concerns mount around global supply. Discussed that yesterday. We've also seen oil futures having a bit of a whipsaw. Just an incredible move that we saw yesterday. The past 2 days, to be honest, moving down from 76.20 down to 64. I was speculating, whether we'd seen a flash crash because if you go down onto the 5 minute time frame, it looks like there's been some pretty big liquidations here. That's the size of that move. This was in 5 minutes, so I mean that is a flash crash. That's a 400-point move within minutes, and a fade straight back up within an hour or two after. So quite a remarkable move there on oil, and it's been a tumultuous couple of days for crude as well. I've been posting about it in the chat room, but with concerns globally about recessions, a softening US economy, and a continued fragility in the banks, weak manufacturing data in China, we've started to see more traders turn bearish on crude. And remember that huge gap up that we saw has now been fully faded. We're now back testing the lows, and this was after the Saudis announced all the cuts. When was this? This was at the end of last month, start of this month. So we're only going back. Sorry, that was the start of April, so this is over a month ago now. So we're not going back too far, basically. So from here, where do we go? Well, we've seen the bounce off the current yearly lows, and now we're due to head back into 70.15. But we're just seeing a little bit of a settle after what's been, an incredibly volatile 2 days, essentially. Corporate earnings, like I mentioned, Apple, big highlight today. It's been driving some of the market gains in recent times. I've been posting charts about that inside the index chat room if you want to check it out. We've got Coinbase today, Hyatt, Carlyle, Kellogg, Moderna, DoorDash, Carvana. It's quite a lot on the agenda today. What else have we got? We've got Microsoft and Google CEOs also due to discuss AI risks with Vice President Kamala Harris today. So quite a few things going on. If the market didn't already need that after yesterday, ECB. Let's wait to see what Lagarde has to say in her presser. I'm not expecting it to be massively market moving regardless. So what I'll do is leave it there and see you all inside the chat room. Thanks for listening and all the best with your trading.